GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of this weekly webinar. So today we're covering some of the major asset classes out there available for trading. We're looking at Forex, we're looking at commodities, we're looking at Bitcoin, and we're also looking at the S&P 500 as far as stock indices go. Now there's a lot going on out there at the moment. We're on the countdown to the US election. We're looking for US stimulus. There's all sorts of factors going on here which are driving some price action in the market and offering some opportunities. So without further ado, let me jump straight into these price charts. So we're starting off with the Euro chart here. Again, let us remind ourselves the situation on the longer term basis is that we've bumped into this down sloping trend line. So as in the euro has been declining on a very long term basis since 2007 against the dollar, and it's trying to kind of break that trend, but it's understandably, it's been a long-term trend. It's having a little bit of a tough time doing so, and that's what we're seeing on the daily chart at the moment. All this consolidation, the drop, consolidation again, is us trying to fight through this long-term trend line, which you can see looks a bit more flat through this daily chart. Now we've broken this declining trend line. That's a good bullish sign. We've equally broken this very clear-cut declining trend line on the RSI chart. We showed both of those last week, and we had a dip and we've had a rally off that broken trend line, which again is a good step. You want to kind of when you're talking about a resistance, even a dynamic resistance like a trend line, once you've broken it, you want to test it, then rebound. That's classic price action of what we've seen right now. Now we can see on the shorter term 4-hour chart, this was the rebound off the 116 low. It was quite a decent uptrend in what had been before, obviously, a steep downtrend, and so obviously sellers tried to sell this thing down around 118 and eventually did get some selling momentum, and you can see that we initially tried to bounce off these lows here. This was the low, came down, tried to bounce, couldn't do it, but eventually we were able to bounce off these lows. We rallied up, and typical of what we want to see in a decent uptrending market is a pullback to the round number and also to the previous peak, and a rally strongly off that. So that's all looking pretty bullish on the short term. We're talking about the context of a bullish long-term trend via the daily chart. So we've got the alignment of the 4-hour and the daily chart both pointing bullish at the moment. The thing to keep in mind is we've got pretty stiff resistance 119 through 120. So if selling opportunities do present themselves in that 119 to 120 area, they're not to be dismissed, because strictly speaking we're still in a range. Just the way that we're trading at the moment, it looks to me like we are going to break out of this range, and I think probably I've flipped that opinion a couple of times, particularly obviously during this dip, but as we stand at the moment, you can't deny the kind of bullish price action signals that I just described to you. So as it stands, obviously now as we're heading into the old high, not necessarily a good time to be buying, but what we do want to see to confirm our kind of bullish thesis here is we want to see a push up, ideally to 119, maybe a pullback to this previous peak, could even come back down towards 118 again, and then an opportunity to buy in at lower prices, assuming this uptrend continues. If we see some kind of vicious reversal, having got up to 119 in that 119 to 18 space, then we could take a bearish position and look for a pullback, and 118 is obviously the first area we would look to look for price to maybe to stabilize. Now you see that in the pound there's a similarly bullish trend going on. Obviously we're talking about the dollar in both these scenarios. This is the daily chart. So something I did want to kind of point out initially in terms of a potentially bearish warning sign, it's already kind of played out, is that let me let's see on the, no, probably was better where I was. Okay, I zoomed in at a daily chart. We had a pretty vicious sell-off, a little pullback, and barely took out the low, but a 3-day pretty hard sell-off into 127, and we've just meandered higher since then. We've made it, we have made it 300 pips, we've made it 400 plus pips. But what has happened, as you can see pretty starkly, we had that big sell-off. We sold off at the 50% Fibonacci. We sold off at 130 twice. Then we sold off at the 50% pullback, and now we've sold off at the 61.8% pullback. So in terms of like classic obvious places you'd look for the price to pull back in this correction, it's pretty much hit all those classic areas. Now 130 having been resistance here is now support. We really ideally need to see 130 hold for this bullish action to continue, and I think if it doesn't hold, that would be the first sign. The second sign will be this rising trend line on the 4-hour chart. If 130 gives way, then this rising trend line gives way, then actually what we can start to think is that this was a kind of this was like the kind of powerful down move, if you like, a piercing, strong character down move. This was the meandering corrective move, and then actually what we potentially are looking for when we confirm this breakdown here is another piercing down move lower. So that is a potential bearish scenario to look out for. But again, getting a little ahead of ourselves here, because actually, as we said on that 4-hour chart, things are actually choppily moving higher. So at the moment, really, if we did get a move down to 130 or this rising trend line, they should first off be bullish opportunities to buy in to a kind of decent longish term, to a bullish trend, albeit a choppy one. So then there isn't too much resistance beyond the 61.8 Fibo, and if we do see some buying off 130 or the rising trend line, then I don't think it's going to take too much of an effort to get through this price action area here. There really wasn't any obvious, because this was just such a sharp drop. It opens up and move sharply to the top side to come and test out that 135 level again. Okay, moving swiftly on to dollar yen. So for the most part, I've been, I think I've been fairly on the money in terms of these currency pairs, looking for them to continue to the top side in line with the longer term trend. Where I've tried to be a bit clever, and it's come back to haunt me for the time being at least, is in dollar yen, where I've been talking about the prospect of this down trend line breaking. Obviously, given the price action from Wednesday, that was not the right move. Now, clearly, I wasn't. The general idea, from what I said, I believe in last week's webinar, was to look for a break of this down sloping trend line in order to start looking at bullish opportunities in the market. Now, we never got a bullish break of that trend line, so there was never any reason really to be buying down here before this steep move lower. But nonetheless, you ideally obviously want to have the trend in mind and looking for opportunities in line with the trend. And if you're looking for opportunities in the opposite trend, then you're going to miss the ones in the direction of the trend. I think you know what I'm saying here. So this was the move to capture, which I fully admit I was looking at the break of the trend line, concentrating on this double bottom, which at this point could become a triple bottom, so I haven't learned my lesson. Maybe it's still a bottoming pattern ready to happen, but while I was looking at this double bottom, a possible break of the trend line, didn't have full attention on the fact we had a sharp move lower, a corrective move higher, as I was discussing in the pound, where we had a sharp moves to the downside, corrective move higher, where it was choppy backwards and forth, and then a nice sharp move to the downside again once that correction broke. So that was the trend obviously to be involved in. Where did it stabilize? Well, we didn't get right back down to those significant daily lows. There was an interim low, which you can see there on the 4-hour chart, which was pretty much enough. Around no particularly significant round numbers. I think it was probably a decent extension below 104.50 is where we eventually found our support. You can see around 104.70 at the moment. So Now we're down towards the lows. The risk-reward opportunities for looking to move to the top side are clearly better, and actually from this daily perspective, it's really a range. It's not particularly downsloping, but clearly from this 4-hour perspective we had some sharp moves lower, and it doesn't seem to be, it doesn't feel like you're on the right side of the market to be looking for buys just yet based on what we're seeing on this short-term 4-hour chart. If we see some pattern and some break of pattern to the top side on the 4-hour chart, convincing us that this daily support is holding, then that's a different story. But I don't think we're seeing that yet, and we could just as easily see something along these lines, another break to the downside. Moving swiftly on to the Aussie, looks a bit like the Euro. This downsloping trend line has worked pretty well, and also buying at 0.70 has worked pretty well too, and you can see that we've bounced off there more recently. Not a lot more to say about this. We're basically in a range between 0.70 and 0.72, and if that is the case, then we can see that we've kind of broken through a couple of areas of resistance here. We may be looking for a re-challenge of 72, but to be a bit more determined on direction, I think probably what we need to see is a break of this declining trend line on the top side, or just a at this point, if we do see some kind of move through this move higher, then we could look for a retest of 0.70, but again kind of contained within the range. So less to add on this Aussie dollar obviously than other pairs, just because we're in a range and it's pretty hard to pick a direction. So this is the thing about trading, if you feel like you don't know what's going on, don't trade that market. And in the Aussie dollar, the way I look at price action, it's not too clear to me what's happening. It will become a little clearer, as I say, if we break through that declining trend line on the daily chart. So here is gold. Excuse me. So I've drawn this resistance in here, rather hopefully up here. This is what happened this week, and you'll note that the team put in one of the daily articles out, and we actually had this gold chart in there, and what we were looking for was a break of trend line. So 1, 2, 3, 4 touches, break. Also the moving average in there, the 50-day moving average, a break of trend to the top side. But what actually we got was a bearish engulfing pattern from the moving average and from the trend line. Now all is not lost. We're above this rising trend line here, but false breakout, not necessarily a particularly good sign, and it could indicate that we're in for another leg lower. So again, something like the sharp move down, I mean even here, sharp move down, correction, sharp move down, correction. Are we on the cusp of another sharp move down? Do we need another one of those maybe before we've flushed out all the weak hands and the real gold bugs take over and start buying this thing up again? That said, if we do get another flush lower, this has been quite decided support. What is that level again? Okay, 1860. A move through 1860, given that it's been pretty stable support on the daily chart here, that wouldn't be very good news, and you could sort of see a bigger correction taking place were that to happen. Probably a lot of stop losses under there. So this is what happened last time. Obviously, big move up, place your stop loss under there. Banks come hunting for places where people are putting their stop loss orders when they're buying. So obviously that are sell orders. If you want to buy as a big bank, you hunt out those sell orders and you use them to buy up the market. So unfortunately that is the way things happen in markets. Not always, but sometimes. There's the big fish out there, They have their advantages of more information, and smaller players like us, we have a bit more. We have the advantage of being a bit more nimble. We don't have to move millions of dollars at a time. We can jump in and out on the market without actually moving the prices. So that's a distinct benefit of being a retail trader, but situations like this can happen, and maybe if we get a drop down again, it could repeat, and actually, if we're aware of that kind of stuff going on, we can buy in at 1860 again. I'll certainly look at the price action there, but I'll be wary, be pretty wary of a third test. I think it could open up some downside. So at the moment we're holding above the rising trend line. We've had one false break, which is a negative sign, but we haven't had the next confirmation, if you will, which would be the break of the rising trend line, which sits right in around 1900 as it happens. Here we are in here. You can see two buys up have helped us close above 19. Okay, moving on to the oil market. Now this, I mean, there has been some big daily price swings, but in terms of trend, this is being very dull. And so pretty clear-cut resistance, and actually there have been so many, if you were just aware of this resistance and this is your kind of style of trading, 1, 2, 3, 4, 5, 6, 7 if I'm being conservative days, or if you just sold at the start of the day and closed by the end of the day even, you would have made a little bit of money out of just that very clear resistance of 41.79. Maybe you wouldn't have known about it over here, but 4 or 5 opportunities just to sell this down on a short-term basis, and we've been holding 40 on the downside thereabouts. Next level of support pretty clear cut down at 37. We don't know where this is headed next. It's a very flat market. We do know that we've hit the kind of major support level 3-ish times. We've only hit the top level twice, and we've kind of formed an interim top level. So if I was putting all those pieces together, I'd say it's showing weakness in the market, that we can't take out the 50 level with any conviction, and we can't even make it to the top of the range again. That all to me would signal weakness, but all the price action off this level, off this 41.50, which has been the interim peak, there's been no convincing selling going on there. So I would maybe look out for, again, trying to think, one chess move ahead here. There will be a lot of people with maybe buy stop orders, which on a short-term basis could work, but buy stop orders above this resistance, which is basically, I said 41.50, really, I guess it's between there and 42, however you want to draw it, really. This little, it's under 42. Buy stop orders above 42, I guess you would say. If we had a decent move up through, again, a lot of buy orders out there could run into just the next resistance and face a barrage of selling, which sell us back down toward the bottom of the range again. So some sort of move up to the top of the range, I'm saying, having broken that interim resistance might be a good sign, might be a decent signal. Okay, and now talking about Bitcoin. Now I've gone a little bit more specific on this one. Here's the daily chart, and again, I was fairly happy to admit when I was wrong on dollar yen, look for the break higher, and didn't materialize, actually turned lower. Bitcoin been pretty on point. So greater context here is that, we're on the weekly chart here, 10k you can see was a pretty clear resistance. We broke above it, ran into what has, on a closing high basis on a weekly chart, has been significant. The 12k level, pull back from there. Now of course we could have broken down to the 10,000 level again. I was open to that idea. We were consolidating above 10k for a month or so, but we then got some short-term signals that we were breaking out of that base above 10k, and that was when I started talking pretty bullish on Bitcoin. And there was a few different scenarios. Break of the short-term trend line here, this is from last week, where we said this was a positive signal after a correction, break to the top side, and then even if you're drawing through these peaks here, and you can see that's where we gapped above, and then even through this high which I just had, We then pulled back to the high and started moving off there on a daily basis, and then really took off on some positive news around the 12k level. So looking pretty positive on Bitcoin. And again, looking at this weekly chart, you can see we've not closed the week above 12k, except this 1 week here, which is basically the high we're targeting next, which is 13,800. Except that 1 week, we've not closed above 12,000 since good old late 2017, or was it early 18? Let's have a look. When the price started really coming off. Yeah, it was early 18. So yeah, it peaked in, when was it, December? Yeah, of 17, and obviously the market just absolutely tumbled for the next year or so. And now, you know, as of here, it looks like we're potentially making some big base breakout to the top side, potentially a very bullish moment for crypto. Of course it could be a false breakout again and we drop back through 12,000. We've got to look out for that, but for the moment, assume the break holds. Now on a 4-hourly shorter term basis, this was that high and the kind of you know, the level we were talking about. If we use that level again as the low and then the most recent high, you can see the 50% pullback of that would be 12,200, which is also where we had a consolidation in the price on the way up. So round number 12,200, 50% Fibo, and a level that's just above 12,000, which actually quite neatly comes in alongside the 61.8 Fibo. So we could get down there, but I feel like it's too obvious to be to wait for that move right down through 12,000. If we get to 12,000 again, I sort of feel like we're going to break below it. I think anyone who is bullish on Bitcoin is not going to wait for 12,000. They want to have to jump in before we get there. Now it could be just this previous high here, which is more like what, 300? Oh no, 12,450 in effect. It could be just 12,450, but as I say, I mean, I'm surprised. You know, I'm looking for lower prices than that. That wouldn't be much of a pullback from where we currently stand. It'd be $400 from the current price, which is certainly possible, and certainly look for any signs of a reversal in that area. But I feel like that, you know, this little confluence maybe is going to be a magnet for the price and a potential opportunity. But let's see. Last but not least, let's have a look at the good old S&P 500. So this is the daily chart. We broke out of our, you know, we had the correction, we broke out of a base. We've gone a bit more choppy in the last week and a half. Bit of coronavirus, rising cases, election, stimulus uncertainty. The market's been mostly lower, but just kind of choppy every day. And now on a 4-hourly basis, you can see that that's actually provided a pretty neat little trend line. And so maybe this week we get a push to the top side above that rising trend line, or as I say, not. And if we take out this kind of neckline again, so if you say that was a sort of inverse head and shoulders in effect, we pull back to the neckline, you want to see it rally up. If we break back through it, and which happens to be the 50-day moving average, then I think that could be a bit dicey, and we can actually see a move back down to the September lows. And you know, given all the uncertainty out there, you know, you really have to say that that's not a completely unreasonable scenario. But it's just such a strong trend, and we've pulled back to the old support and a moving average, and so because of the uncertainty out there, you know, I'm not maybe looking to kind of buy right in at the level, but I think what you can do, as I say, is wait for the kind of confirmation of the break on a short-term basis to give you a clue that this break actually has some real legs. So a break through this zone could be the kind of confirmation that you need that the uptrend is continuing in stocks. Right, that is it. Thank you very much for watching, everyone. Good luck trading this week.